Hello and welcome to Startup Street. I'm Arundhati Ramnan, and with me from the Bangalore studio is Ritu Singh. These are the top headlines from the startup world. FMCG major HUL is in talks to acquire Jaipur-based skincare startup Minimalist. According to money control sources, HUL is likely to buy the Peak 15-backed firm for 3,000 crore rupees. If the deal goes through, Minimalist valuation will soar to $350 million from $75 million in just 3 years.
Indian government responds to the controversy surrounding H-1B visas in the US. The Foreign Ministry says the visa program is beneficial to both nations.
Electric vehicles do not need any new incentives, says Commerce Minister Piyush Goyal after meeting industry leaders. Minister says industry concurs with the government's view, discusses plans to boost charging infrastructure.
Logistics startup Cargo FL bags nearly 7 crore rupees in a seed funding round. The round was led by Your Nest Venture Capital. The funds are going to be used for geographic expansion, enhancing product capabilities and client onboarding.
The Uttar Pradesh government looks to create a 4,000 crore rupee corpus to promote startups in the state. The proposed corpus will be facilitated by the state government and the investment managers under the aegis of the UP Innovation Fund.
Nestaway's co-founder Amrendra Sahu lodges an FIR against the company's investors, including Tiger Global, Goldman Sachs and Chirite Ventures, as well as his co-founders, accuses them of cheating and fraud.
Bitcoin prices inch back towards $100,000 as it marks its 16th birthday. Crypto investors are betting on a favorable market environment under the Trump administration and hopes the US Congress will pass its first ever crypto-focused legislation.
Well, those are the headlines that we're tracking for you today on Startup Street. Now, in what's brewing today, fintech platform Curie Money has raised $1.2 million in a seed funding round that was led by India Quotient, with participation from other institutional investors and angel investors in the fintech space. The funding is going to be deployed to strengthen the company's core team, advance product development, scale technology infrastructure, and build strategic partnerships for its growth and market expansion. For more on the company's growth plans ahead, joining me now is Arindam Ghosh, who is the co-founder of Curie Money. Arindam, thanks very much for your time here on Startup Street. Very briefly, for the benefit of our viewers, tell us about Curie Money, why you started this, and what you're doing differently from the 2,000 plus fintechs that exist in the Indian market.
Hey, hi Ritu, thanks for having me here. And so to fundamentally talk about what Curie Money is, right? So the way we like to put it, it's essentially India's first money market account, or what we have gone ahead and done is transformed your savings account into a place where you can essentially keep your money invested into fixed income mutual funds and at the same time enjoy all the benefits of your mutual fund, all the benefits of your savings account, essentially make payments via it. And the way it's different from rest of,
go on. The way it's different from the rest of the fintechs is?
The way it's different from the rest of the fintechs essentially is fundamentally we have not seen a lot of innovation happening on top of savings account. We have seen in the past 10 or 15 years, so innovation happening in the payment space, innovations happening in the insurance and wealth tech space, a lot of wealth tech players coming in, but the savings account fundamentally has remained the same. What we have built essentially is a way in which people can gain more out of their savings account by keeping their funds invested in fixed income mutual funds instead of it lying idle in their bank accounts.
All right. Well, let's get to that $1.2 million seed funding that you've got. What does this investment mean for your journey? How will it help you deploy, or how will you rather deploy this money for growth of the company?
Right. So first of all, this is a great vote of confidence from the market in terms of a product like this existing. The idea is to definitely get to more users, grow the current user base that we have. We are just right now had launched in beta, and also to grow into segments like current account, from where we have received tremendous pull from the market in terms of current account currently provides 0% interest to all its holders, and we think we can really make a dent in that market in terms of providing a much higher yield than a traditional bank account.
Okay, it's interesting you recently secured the NPCI's approval to operate as a TPAP, the third-party application provider. What are your plans on the UPI front? What sort of dent do you think you can make in a market which is so heavily dominated by a handful of players, the 30% market cap notwithstanding? What are your plans here?
So yeah, that's right, Ritu, that currently the incumbents do hold a lion's share of market when it comes to the TPAP market. in terms of very few players essentially having much of the market share. But we do believe those are really the first generation of the TPAPs or the UPI apps that have come across and built on top of the payments proposition. But as and when we speak more, and as and when we notice what's happening in the market in the last 1 or 2 years, many new entrants or have sort of gained market share from incumbents. And also there are more and more new players coming in who are building on the specific use cases of it. So if you look at Curie Money, for instance, what we have built is on a very innovative edge of providing higher returns to people. So as and when the market evolves, we do feel there is a lot of space for the second generation of TPAPs to come in and build their own space within this. So yeah.
Well, we'll see how that proceeds. But Arindam, could you give us a sense of the various revenue streams you have and what your current revenue rate is at the moment, including the various businesses you are in, and how that's expected to grow?
Got it. So currently, as you know, Ritu, we just launched in beta. It's just been a month or so it's still too early to say. We are sort of pre-revenue right now. And the idea is obviously to integrate different revenue products as we go ahead. But as of now, the idea is to stay closer to this savings product or stay closer to this bank account product and gain much of the market share or a larger amount of market share in this banking sector itself or in the banking product itself. And then there will be further revenue lines coming in front. Right now, it's too early.
Okay, we'll wait to see how that pans out. But, you know, currently what you offer is a no minimum balance savings account in partnership with Yes Bank and a fixed income scheme in partnership with ICICI Pru Mutual Fund. How are you looking to expand these partnerships? I know it's early days, but are there more players you're in talks with?
So in this early days itself and in the past 1 year or so that we've been building, we have definitely doubled down on these partnerships. The idea is definitely to bring in more products or bring in more revenue lines for our existing partners. But at the same time, yes, there have been quite a few talks in terms of other partners potentially joining in. There are quite a few active conversations as well, but I think more on that later as and when things materialize. As of now, there's nothing concrete on those sides. But yes, we are definitely actively talking to other people as well.
All right, Arindam, we're going to have to leave it at that. Thank you very much for your time here today, and we wish you the best with your venture. Thank you.
Thank you. Thanks, Rizal. Thanks a lot.
And on Investor Eye, startup accelerator India Accelerator has announced the launch of its 2025 cohort. As part of the cohort, it plans to invest $8 to $10 million in a bid to accelerate 30 to 35 startups across transformative sectors, helping them turn ideas into scalable, market-ready businesses. India Accelerator is a seed-stage startup accelerator that aims to foster innovation and support upcoming founders. Joining me now to discuss their latest investment plan is Deepak Sharma, the co-founder and managing partner at India Accelerator. Deepak, thank you so much for taking time out and being here with us on Startup Street. You know, first up, India Accelerator has just launched its cohort for 2025 with $8 to $10 million in funding commitment. If you could sort of give us an idea of investor appetite for Indian startups, what are investors saying about the Indian startup ecosystem?
So if we look at it, the Indian startup ecosystem, this is the most prominent time to be a startup founder as well as a startup investor. We are the third largest startup ecosystem in the world with more than 100,000 plus startups. If we look at it, the combined startup funding, which has happened in the last decade or so of more than $15 billion, which has happened from a startup exit perspectives, there have been 13 unicorns which have taken exit in the last year with about a total fund raised from the public markets for about close to $4 billion. So this is the best time to be in the startup ecosystem, whether you are an investor, founder, or an enthusiast.
So it's the right time to be in the startup ecosystem. So safe to say it's an exciting time for Indian startups out here. So, you know, you have this $8 to $10 million in commitment, right? You're looking at about 30 to 35 startups through this cohort. Have you already started deploying these funds?
So at this point in time, we just announced the start or the kickoff of this specific cohort. As you talked about, there are about 30 to 35 transformative startups that we are looking at, which have groundbreaking ideas, and we'll turn them into scalable, market-ready businesses through the fund infusion of $8 to $10 million through our partner entity, which is called Finvolve. Through Finvolve, we can invest across stages, so can take a startup right from early stage to an IPO. And primarily, these are transformative sectors which have a huge potential in the coming years. It starts with robotics and unmanned aerial vehicle. So essentially, startups which are in autonomous drones can be used in defense, reconnaissance, agriculture monitoring, logistic operations, to energy, mobility, and connectivity, primarily on the EV, renewable infrastructure, and smart grids. To AI applications in dynamic content generation, voice AI, vertical AI, enterprise SaaS, productivity efficiencies, and autonomous analytics to cloud ops, to Impact Labs, which is our venture tackling water resource management and some of the SDG goals.
So lots of sectors that you're looking at across the board there. But apart from the monetary investment, right, what is the kind of backing that India Accelerator will be able to provide these startups in a bit to help them scale? Like, what's your investment thesis, and how do you pick these companies?
So essentially, when we look at it from a startup identification perspective, we use a very simple framework, which is called 4Ts. So this essentially stands for team, technology, TAM, and traction. So we essentially look for good startup founders who have deep domain expertise, cross-functional skills of sales or technology, to back up with. They are working on a deep tech, innovative product which is solving a pressing problem of the industry. We look at it from a TAM perspective. The TAM is going to have a multiple CAGR in the future, and then of course the traction in terms of what have they achieved in the last few months or few years of their specific operations when they were bootstrapped. So those are some of the things that we look at a specific startup when we onboard them from a fund perspective.
Right. And if you could sort of, take us through the kind of portfolios that you've already, sort of built in the past and the kind of big bets that you have, and what's your outlook for 2025?
Some of the existing investments that we have already done in the past include Matter, which is India's first EV gear-based bike. Then we have invested in Ethereal Machines, which is industry standard on CNC 4-axis machine. We have invested in an ONDC e-commerce platform called Store Hippo. A lot of investments on the drone-specific side, which is called Zulu Defense, Hardkill, drone-specific systems. On the AI side, a lot of startups on cloud ops to autonomous analytics to AI recruitment and agentic systems is something that we have done in the past.
Right. And, if you could sort of tell us, there are so many VCs out there, so many cohorts that are being built out there. So what do you think sort of sets India Accelerator apart?
Some of the USPs that we have as part of India Accelerator is that we have a specialized mentor board. These are best of industry solvers across robotics, AI, mobility, and impact-driven sectors, which provide sector-specific guidance, ensuring each startup has a tailored strategic support. There is a lot of focus on go-to-market, essentially startups looking out for GTM support, geographic expansion in the Middle East and US. So that is something which we provide. IEA, along with its partner entity, Finvolve, through its investment arm, we can infuse 8 to 10 million right from across stages, from seed stage to IPO. And then we also have a lot of academia and industry connect, where we look at industry needs, take it back to academia, IITs and IIMs, and then back these startups which are leading to disruptive innovation. So that's our kind of sweet spot and mode. So we are essentially a VC with an operator VC perspective, that we work hand in hand with the startups, with the founders in terms of their growth and expansion.
All right, Deepak, thank you so much for joining us on the show today. We're completely out of time, but we wish you all the best going forward.
Thank you so much. Thank you for inviting me and having me here. And through your channel, we would request all the promising startups to reach out to this as part of the cohort, and reach out to us for funding, GTM, and support going forward.
Absolutely. I'm sure that's a great pitch. I'm sure there are a lot of startups looking to do that. Thank you so much, Deepak.
Thank you so much for having me.
Okay, on that note, we have to take a short break, but up next, social entrepreneurs are gaining global recognition, with India leading with over 2 million social entrepreneurs. A special report on the other side.
Welcome back. You're still with us on Startup Street. Social entrepreneurs are gaining global recognition, with India leading the charge, boasting over 2 million social entrepreneurs as per reports. India's social sector grew 13% annually over the last 5 years, contributing 8.3% to the GDP in FY23, amounting to around $280 billion. In this report, Aishwarya Anand puts the spotlight on 3 social entrepreneurs who are transforming the lives of marginalized communities through employment, poverty alleviation, and sustainability. Take a look.
Alina Alim is on a mission to transform the disability sector with a social enterprise Mitti Cafe that provides dignified and equitable economic opportunities to persons with disabilities.
What led you to start Mitti Cafe?
There are over 70 million people with disabilities in India and over 1 billion people with disabilities across the world. But the problem is not that there are people with disabilities, the problem is a larger statistics, which is the disability and the perceptions of the community that stops us from seeing the magic in their abilities. And I wanted to challenge and change just that. I started Mitti with zero startup capital and multiple rejections with the support of the community. Our first cafe was in a dilapidated tin shed full of generations of rats that the student community helped us clean. The vegetable vendors gave us baskets that turned into our lampshade. Our first employee, she came in crawling for the interview because at that point of time her family could not afford a wheelchair. While we started from one tin shed, today we are close to 50 cafes, pan-India managed with love and dignity by adults with physical, intellectual and psychiatric disability.
What is the kind of impact Mitti has created till now in terms of, I would say, employment, in terms of generating income? If you could give us some figures on that.
So currently we have over 600 people with disabilities running the Mitti Cafes. Along with that, we've been able to skill and place over 5,500 people with disabilities. Our team members with disabilities have cooked and served over 6 million meals to the economically vulnerable, thereby changing the paradigm that persons with disabilities, given the right kind of support, can not just support themselves but support the nation in need.
Anish Kishore Malpani took a risk in his career when he left a lucrative job in the US to begin a startup in India. Funding his idea from his own pocket, he launched a startup called Without. But it took him a while to decide what he wanted to produce. After research, he zeroed in on the idea of producing eyewear from chip packets picked from garbage.
Turning waste into sunglasses, what was the idea behind that?
First of all, we looked at the entire waste landscape to see where the problems really lie, right? And these chips packets, right, are called multi-layered plastic, or MLP. Less than 1% of this is recycled globally. So we're like, okay, this is the problem that we should be working on. Now we have a patented technology that separates the layers of multi-layered packaging like textile chips and extracts materials from it, which we then convert into high-quality products and materials like these sunglasses, which are made from packets of chips. I don't think sunglasses is going to solve the waste problem or the waste picker issue, but it's a proof of concept. You can take impossible to recycle plastic waste and you can make it into high-quality products and materials. And this is 100% recyclable. We don't add any virgin plastic to this.
How many sunglasses have you sold till now? Where are you selling these products and how have you priced them?
We sell them on a website right now for like 1,000 rupees. As a proof of concept, we've probably sold like 2,000, 3,000, 4,000 sunglasses since we launched. But it's not core to us, right? We're trying to work on the material science side of things and develop high-quality customized materials that can be used by eyewear manufacturers, that can be used in other applications as well, like signage or toys or other things as well.
Give us a sense of your recycling plant. What's the capacity of it? How much have you recycled till now? And what's the target you're setting by the end of next year?
Until now, we have like a micro pilot plant we built in our little facility. We process between 5 to 8 kilos of multi-layered plastic a day, which is nothing. But it's still not 5 grams or 50 grams, right? It's big enough to be like, hum scale kar rahe. And right now, we're in the process of building our first pilot plant, which is going to take our technology at a bigger scale, at 10x the scale, which is again not crazy. We'll be doing about 150 to 100 kilos a day.
Since its inception in 2015, the Nudge Institute has been working with governments, private citizens, and social entrepreneurs to develop economic solutions tailored to specific needs. Integral to the organization's mission are its incubator and accelerator programs, which nurture early-stage social ventures by providing not just grants, but also hands-on mentorship with the world's best problem solvers.
If you look at the social enterprise ecosystem more broadly, including non-profits and for-profits, the ecosystem isn't very, very healthy. the amount of capital that government is putting for creating entrepreneurship is not immaterial, it's quite large. But how much of that actually goes to social enterprises, that's a small fraction. So the ecosystem of capital is missing and hence talent can't come in. If talent is not coming in, there is no way you'll actually meaningfully solve problems. So what we try to do is, we try to look at the intersection of these four things: technology, policy, talent, and capital, and try to make this ecosystem better for these non-profits and for-profits to thrive.
In Delhi, Aishwarya Anand for CNBC TV18.
Well, moving on, according to the World Research Institute, construction industry contributes more than 50% of carbon footprint. And that is the problem startups like C-Disk Technologies are trying to fix. In a conversation with my colleague Jude Sanith, Jeesh Venmarath, who is the founder of C-Disk Technologies, said the startup is engineering technology that suits India's need. Now, he was speaking at the sidelines of the Huddle Global, where he said he expects the industry to become, or expects the company to be a 10 crore worth company by 2027. Take a look.
This is a Startup Rapid Fire with CNBC TV18. First question, what is the name of your startup?
C-Disk Technologies Private Limited, which stands for Center for Development of Innovative and Sustainable Construction Technologies.
And in just one sentence, can you describe what exactly it is that your startup does?
We are manufacturing pre-engineered buildings, wherein we integrate the best technologies available, which makes suitable or adaptable for local conditions.
All right. And what is the problem that you are solving really?
See, construction industry contributes more than 50% of the carbon footprint, according to the World Research Institute.
Okay.
So we intervene in that area for further action.
And what exactly is that solution then to the problem?
We are decarbonizing the construction industry by applying the basic three principles of sustainability, which is reduce, reuse, recycle.
Right.
Wherein in a life cycle of a project, from the concept stage to completion to its end of life, the basic principles are applied.
Okay. All right.
With applying the technology.
And what is the revenue that you will do this year?
Currently, our revenue is 2.5 crores and expecting to be geared up slowly.
Okay. And what kind of revenue growth projection do you look at in the near to medium term?
Yeah. By 2027, we are expecting to grow about by 10 crore, wherein we'll be developing two products. Right now, we are launching to the market. One is pre-engineered nail foundation, which is called Pen Foundation, and our company is incubated at NIT TBI, and we have developed the complete prototype and tested in field and in the lab as well. So now the product is rolled and we have already piloted.
All right. And what is the one key differentiator that sets you apart from competitors in this space?
So the key differentiator will be that no company has so far integrated different technology to suits to the Indian conditions. So we have developed certain ingredients and adopted those technology and developed it. And our future course will be to develop modular net zero energy home, wherein a Make in India product will be delivered to the globe.
All right. And what is the funding that you've secured in your journey so far?
So far, we have got a productization grant of 5 lakh and a construction innovation hub grant for 20,000 US, supported by Kerala Startup Mission, Will Grow, and Twilliger Center for Shelter for Habitat for Humanity.
And what's the one wow moment that you've encountered on your startup journey?
The wow moment is like the Pen Foundation, which we have piloted, got the Best Build Structure Award, which is called SSMB 2024 Award, Steel Structure and Metal Building Award in India.
Okay. And where do you see yourself in 5 years from now?
5 years down the line, we'll be launching our net zero energy home to the global market.
All right. I hope those plans come to fruition. Great speaking with you. Thank you so very much.
Thank you so much.
And with that, it is a wrap on this edition of Startup Street. From Ritu and me, goodbye and many thanks for watching. Stay tuned. More news and updates coming up on the other side.